Hey everyone, welcome back to the Noob Selling Options channel. I am absolutely thrilled to have you here today for another high-performance commando-style portfolio explainer. If you've been following us for a while, you know we don't just sit around talking theory. No way. We break down real, aggressive market moves and structured allocations. Today, we've got a fantastic update for you. We're covering our latest portfolio actions, doing a deep dive into our allocations, and get this, we're even doing a fascinating AI-driven rating of this exact strategy. So let's get right into it. We are looking at a financial engine custom-built for a very specific target, the 2032 milestone. Now, you might be wondering, why 2032? Well, that represents a 10-year time frame from our original starting point. It's a decade we deliberately chose to capture 2 full market cycles, plus the absolute maturation of some really key structural tech trends. Currently sitting at a total value of just over $251,000. $251,988 to be exact. This is definitely not your standard set-it-and-forget-it index fund. It's an actively managed, highly focused machine. We are constantly adjusting our sails to catch the strongest winds in the market. So we're going to jump straight into the aggressive actions powering this portfolio forward, showing you exactly how we're navigating these markets to keep the growth engine revving. All right, Section 1, Weekly Action Showcase. This brilliantly illustrates what disciplined accumulation actually looks like in the real world. It's totally a brick-by-brick mentality. Step 1 this week, we added 2 shares of Meta Platforms, bringing our total position to an even 30 shares. We're aggressively accumulating Meta because of its undeniable role in tech stability. I mean, it's a massive cash flow generator that completely funds its own AI ambitions, firmly anchoring the defensive side of our portfolio. Step 2 was leaning into the crypto ecosystem. We added 100 shares of Bitwise Solana staking, that's BSOL, pushing that total up to a massive 1,300 shares. By the way, staking Solana basically just means locking up our digital assets to help secure the blockchain network. And in exchange, we earn a continuous yield just for holding it. It's pretty awesome. This whole approach is all about methodically scaling into target assets rather than, just chasing green candles on a chart. It's all about consistent, structured execution.
Okay, so our third move was a pure exercise in active income engineering. We banked exactly $95 in pure premium. How'd we do it? We executed the wheel strategy on ServiceNow, ticker symbol NOW. By selling a cash-secured put option at an $86 strike price, we essentially got paid $95 upfront, literally just to wait and see if the stock dropped to our target price. And since it didn't drop down to 86, well, we just kept the cash without having the shares assigned to us, which just means we weren't contractually forced to buy the stock. This is what professional-grade portfolio management looks like. We are taking high-conviction positions and turning them into cash flow engines that actually reduce our overall cost basis over time. Moving right along to Section 2, Portfolio Breakdown, AI versus Crypto. This whole portfolio was built on a very deliberate, nearly 60-40 split, which perfectly balances this $251,000 engine. Specifically, 59.3% of the capital is locked into what we call our AI fortress. That's essentially big tech and high-conviction software. The remaining 40.7%, that is allocated to crypto assets, which encompasses both pure digital assets and related ETFs. By systematically adding to both Meta and our Solana positions this week, we're deliberately working to maintain this exact structural scale as we keep grinding toward our 2032 goal. Now, the absolutely crucial point here is understanding the vastly different roles these two halves play. On one side, the AI fortress serves as our defensive tech moat. It holds really high structural conviction, and it's designed to capture the infrastructure and platform layers of the AI boom using established mega-cap companies. On the flip side, the crypto assets represent our aggressive tiering. This is not just passively holding Bitcoin, folks. It's a diversified ecosystem spanning spot ETFs, which are just traditional regulated funds directly holding the crypto, and staking proxies, allowing us to earn those network rewards we talked about earlier. We're also using 2x leverage plays to capture massive upside while deliberately spreading out our protocol risk. And just to prove we aren't blindly buying the broader market, take a look at the heavy-hitting allocations. We are actively targeting the most transformative sectors of this decade. Advanced Micro Devices, AMD, is our heavyweight champion at 18.06% of the total portfolio. Why such a massive chunk? Well, AMD is uniquely positioned as the primary viable competitor in the global AI data center chip market. It is literally the highest conviction infrastructure play we have right now. Then we've got Alphabet sitting at 15.76%. Amazon is at 10.82%.
And tying with Amazon in weight is the iShares Bitcoin Trust IBIT, also commanding 10.82%. Listen, this level of extreme concentration requires absolute, unshakable conviction in your core thesis.
Okay, Section 3, the AI Portfolio Rating. Drumroll, please. The artificial intelligence rating for this specific investor profile and aggressive growth goal is an 8.5 out of 10. I mean, wow, that is an incredibly impressive rating. It completely validates that this setup is a top-tier engine optimized for growth and premium income rather than just basic, boring passive indexing. Let's take a quick second to digest that, and then dig into exactly why the AI scored it so highly. Let's rapid fire through the specific reasons for this stellar score. First up, high structural conviction gets a perfect 2.5 out of 2.5. The AI recognizes that this portfolio knows exactly what it wants to be. It's heavily positioned in the megatrends of AI and digital assets, without diluting capital into unrelated, slow growth sectors. Next, active income engineering scores a 2.0 out of 2.5. That's directly praising that $95 ServiceNow options play we went over earlier. Aggressive crypto tiering also snags a 2.0 for effectively capturing upside across spot holdings, staking yields, and leverage. And finally, disciplined accumulation earns another solid 2.0, celebrating that methodical, patient scaling into assets over time. But hey, to keep things completely objective and trustworthy, we've got to look at the missing 1.5 points. Why didn't we get a perfect 10? Well, the AI highlighted two main risk considerations. First, extreme concentration. The portfolio is almost entirely correlated to the risk on trade. We have zero traditional defensive sectors, like healthcare or consumer staples, to dampen the blow if the tech sector unexpectedly cools off. Second, leverage sensitivity. Holding 2x leveraged products exposes the portfolio to volatility decay. That basically means if the market trades sideways and just chops around without a clear direction, the daily mathematical rebalancing of these leveraged funds will slowly eat away at your capital. So yeah, it's a high-maintenance approach that demands active, continuous monitoring. Before we wrap up, let's take one final, totally transparent look at the complete portfolio tracker as of May 9, 2026. Every single ticker, the exact share counts, the precise market values, and the percentages that make up this $251,000 milestone portfolio. This level of tracking really highlights exactly what disciplined, high-maintenance investing looks like when you commit yourself completely to a long-term thematic strategy. So that brings us to the ultimate question for you. What is your next move for your own milestone targets? Are you building an AI fortress, scaling into crypto, or maybe utilizing the wheel strategy for consistent income? Let me know your thoughts on this commando strategy down in the comments. And hey, if you love this kind of transparent, direct portfolio explainer, be sure to hit that like button and subscribe to the Noob Selling Options channel so you don't miss our next massive update. Keep learning, keep accumulating, and I'll catch you next time.